In one singular update from President Trump, the stock market crashed. If you were paying attention to the market on Friday, you know that it was nothing but absolute carnage, and in fact, it cost all of us collectively $2 trillion. I am not saying million, I am not saying billion, I am saying $2 trillion was erased in one trading session. Now, that in itself sounds pretty crazy, but what if I were to tell you that this entire situation is just a giant misunderstanding? Yeah, I'm saying, what if there was a $2 trillion misunderstanding? Or what if I really put on my tinfoil hat, take it one step further, and say this was intentionally orchestrated to knock some people out of their positions to allow others to get in at better prices? In this video, I'm going to be breaking it all down. Of course, I'll give you the recap of what happened on Friday very quickly, but from there, and more importantly, I want to get into some wild developments over the weekend and what that means for, most likely, the insanely chaotic trading week we have coming up. Before we get to all that though, if you enjoyed these type of market breakdowns, don't forget to like, subscribe, share the video with a friend, leave a comment below. All that engagement really does help get this video in front of other people who might enjoy it as well. Obviously, thank you for all that support. With all that being said, let's roll the tape. Before we get into all the insane details, I just want to say one thing from the onset. If you've been watching these update videos or paying attention to the live stream, you know that going into Friday, I've been very bullish. Arguably, I had way too large of a bullish position on. So I am feeling some pain right now, as I know many of you watching this video are. Technically, all my losses are unrealized. I was more of a kind of a deer in the headlight situation when I saw the market fall and fall and fall. I got frozen. I really thought that at some point it had to bounce. So technically, the losses are unrealized, but I'm in the hurt locker right there with you. I know many of you watching this took a huge beating on Friday. Looking at some of the updates on the interwebs over the weekend, I know there's a lot of people right now in the hurt locker, and I just want to let you know that you're not by yourself. Of course, it's brutal. There's nothing I can say right now that's going to magically make you feel better. This is just an aspect of the markets, but I just want to say, hey, I get it. You are not alone. And when you really start diving into it, you realize that the bloodshed is far worse than you could have ever imagined. When the market officially closed on Friday, here was the headline. Dow drops almost 900 points, S&P 500 declines the most since April after Trump's new China tariff threat. So if you looked at the S&P 500, it went crazy. We hit an all-time high and then just got this giant puke. We broke the structure. We're right at the 50 EMA. The Nasdaq, similar situation, breaking the recent lows, coming to the 50 EMA, literally off of a new all-time high. You see the similar situation in the Russell. Bitcoin hitting an all-time high early in October, taking a huge hit on Friday, recovering a little bit right now, and of course I'll be getting into that. And the only thing going the other direction was volatility. This out of nowhere, we were just nothing. It was a sleeping bear, I suppose, hibernating at 16 and then jumping up 32% at close all the way to 21. And when you start realizing what happened intraday, holy cow. Everything was fine until almost 11 a.m. East Coast. And then we just puked and we had a little bit of an attempt at a bounce here around 11:30, a little bit at 1:15, 1:30. Neither of them held. And the intraday session was absolutely brutal. So I don't want to be spending too much time on this because there's a good chance you already know what happened, but it all relates to an announcement from Trump. So on Truth Social, it came out technically, when was this? 10:57 a.m. And I do implore you to read this whole thing, but basically not happy with China, not happy about a note that related to rare earth minerals. And the thing that the market really reacted to, one of the policies that we are calculating at this moment is a massive increase of tariffs on Chinese products coming into the US. There are many other countermeasures that are likewise under serious consideration. Thank you for your attention on this matter. It was this announcement right before 11 a.m. that caused everything in the equities market and the crypto market to absolutely vomit. And it was huge. Market sell-off. Trump posts lops off $2 trillion from stocks in a single day. Right here, S&P 500 hits an all-time high. President Trump posts statement on massive China tariff increase and cancels a meeting with Xi, and that's when we puked. Dip buyers attempted to step in. The S&P 500 races $1.2 trillion in 40 minutes alone, and the lion's share of it was from tech. Tech megacaps lose $770 billion in value as the Nasdaq suffers steepest drop since April. As I said before, it was nothing but absolute carnage. The overall market dropping like a hot potato, being led by tech, and it wasn't just price. Check out what happened in the options market. We had a drop of $18 billion in notional value in the S&P 500. This is for the derivatives market, the options market. I have not seen a negative value ever that big on spot gamma, and as we know, it was being led by the Mag 7 here, which dropped about 4.4 billion in notional value. This is people getting margin called, liquidated. You have just nothing but unbridled fear. That's how you get such insane one-day declines, and really that's being shown by the fact that volatility jumped over 30% in one day. For those of you who are more visual learners, here's a heat map of the S&P 500, nothing but blood in the streets. So at this point, you're probably thinking, okay, we kind of got a vague threat from Trump to China midday, but there's no numbers, no updates, and we actually did get one after the market closed, about an hour after the market closed. Here was another update from President Trump on Truth Social. The US will impose a tariff of 100% on China over and above any tariff that they are currently paying. Also on November 1st, we will impose export controls on any and all critical software. So basically, the clock is ticking. They have all of October, and then from there, not just going to 100%, adding 100% on the tariffs that already exist. Trump puts extra 100% tariff on China imports, adds export controls on critical software, and to literally no one's surprise, a little bit after that, China started clapping back. China tells US to back off threats, warns of retaliation, which is bringing up some fair questions now. China defends rare earth export curbs as quote-unquote legitimate, hits back at US tariffs as Trump-Xi meeting hangs in balance. Now, when you start to dive into this, you question who is bluffing and who actually has the nuts. And in this situation, I'm going to argue that Trump probably isn't bluffing and China has a lot more to lose. Trump's fresh tariff assault threatens China's fragile economy. Beijing was already seeing economic momentum slow before the announcement of the latest 100% tariff increase. Some bet measures won't last. We've been covering this a little bit, but basically what you need to know, the TLDR, is all the economic and market signs coming out of China is yes, it is weak and it's getting a little bit worse, and all of a sudden, a 100% increase in tariffs would obviously put more downward pressure on an economy that's already not looking so good. So this brings up the question, is China really gonna be fighting back? So from that alone, I would argue that we were never going to make it to November. I get that on Friday, just looking at the market, it feels crazy. But truly, if you look at how all these negotiations have been going ever since really April, it's one of these things that in the short term, there's a little bit of chaos. And by a little bit, I mean a lot of bit of chaos. And then all of a sudden, all these other trade partners realize that they need the US, and eventually they just acquiesce to whatever Trump wants. And what's crazy about this, like when I was prepping this video, some of the news now coming out over this weekend is blowing my mind. Breaking, China says new export controls on rare earths are not a ban on exports, and applications that meet regulations will be approved. China says they are willing to strengthen dialogue to quote-unquote better maintain stability of global industrial and supply chains, which kind of sounds like they're already walking it back. On top of that, we also just got an update from the Vice President. Vice President J.D. Vance continues de-escalation with China following China's clarifying statements last night. According to the VP, we appreciate the friendship between Trump and Xi. President Trump hopes that the U.S. won't need to use quote-unquote leverage on China. President Trump is willing to be a reasonable negotiator with China. So putting those two things together, I don't think it's that big of a reach to see that things are already calming down, but this right here is the most wild part. Investors are waking up to some major news from China. The entire tariff crash on October 10th may have been just one big misunderstanding between Trump and Xi. The news about China's rare earth export controls came out on October 9th at 8:30 a.m. ET, 26 hours before Trump posted about it. This was a non-news event until President Trump posted about it over 1 day later. Last night, China released a statement clarifying their export controls on rare earths. In the response, China said the new controls are not a full export ban, and applications that meet regulations will be approved. Amid the market's downturn on Friday, our view was that 100% tariff announced by Trump was a bargaining chip. After China a statement last night. We believe that the odds of Trump's 100% tariff on China going into effect are extremely low. Clearly, we haven't really ever seen it play out this way, where the other countries basically don't kneel to Trump. So I already assumed that on Friday in the panic. But now with this whole thing of just saying, no, this was a misunderstanding, it seems very, very, very unlikely that we're going to get to the point with the 100% increase in November. But with that in mind, that doesn't mean that there wasn't real pain on Friday. The largest crypto liquidation in history and a $2.5 trillion loss on the S&P 500 appears to have been driven by one big misunderstanding. We expect another trade deal soon. 100% agree with that. But like I said, even though it seems like things are going to get quickly fixed, it was real pain. And whenever there's real pain, well, that's someone else's profit. And when it comes to the current state of how markets and economies run, it always seems like someone is in the know. Check this out. It's official. Crypto just saw its largest liquidation event in history with a 1.6 million traders liquidated. A whale on Hyperliquid placed over a $23 million worth of shorts at 4:49 p.m. yesterday. Exactly 1 minute later, President Trump announced a 100% tariff on China, leading to the largest liquidation in history. Obviously, it wasn't just a bloodbath in the equities market, it was also in crypto, and someone made a lot of money, millions and millions and millions of dollars of other people getting blown out. So not only is that pretty insane to the downside, but now we're seeing it Uno reverse back to the upside. Depending on when you're watching this video, you could see that BNB, you could see Bitcoin, you could see Ethereum. The crypto sphere, now that the equities market isn't open as I'm filming this, is already bouncing back on all these murmurs that it was just a giant misunderstanding. So if we take a step back, the major question is, what in the world does this all mean? Well, first of all, I just want to reiterate it. If you took a beating on Friday, I'm right there with you. My heart goes out to you. But based on the information over the weekend, it seems like we have a fighting chance coming into this upcoming trading week and really for the remainder of October. And I do want to remind you, the seasonality of October, November, and December is very bullish. This is 20 years worth of data. The last 5 years worth of data, same thing, October, November, December. If we look into the weekly, we have a couple strong weeks, especially the one about 4 or 5 weeks out. This is probably early November. And we also have some other announcements. We have Powell speaking on Tuesday. Maybe he says something positive. Of course, there's the risk of saying something a little bit more hawkish and it could drive it down, but I'm just trying to call out these events that very easily could have a huge impact on the market. So if I had a crystal ball and could guarantee you which way this was going to go, of course I would let you know. I just want to call out these events that you should be paying attention to, because all of a sudden, if tensions simmer down, some of these measurements come in pretty solid, maybe even take care of the government shutdown, that'll probably be enough of a reason for dip buyers to come in and do their thing. But anyway, for the upcoming week, you might want to be paying attention to the Powell speech, the CPI report, the PPI report, and then of course, if the government does open back up, which right now it doesn't seem like it's going to, we might be getting some of those unemployment numbers on this Friday. Right now, according to Polymarket, they are 96% confident that we will be shut down past October 15th. And then if you look on Call Sheet, it looks like the shutdown as of now, and it's just been going up and up and up. They're looking for it to be at least 32 days. That's the current bet, as in the whole month of October, which has big implications on the Fed, because remember, at the end of the month, that's the next FOMC meeting. And the question is, are they really going to cut rates when they don't have any new data? So of course, in the upcoming week, pay attention to what's going on with the Fed and monetary policy, any of those major data drops. But obviously, the big story is going to be the gigantic $2 trillion drop on Friday. And really, are the dip buyers going to come in, or are the bears actually going to, for once in the past, 2 quarters, finally going to show up and drive the market lower? If you ask me, and this is just a pure guess, please don't make any bets on this. Based on some of the news and the rhetoric and what we're hearing already from this weekend, it looks like everyone is putting in a giant attempt to calm things down, which is still making me a little bit more bullish than bearish. But of course, I'll be watching the recent lows. I'll be watching that 50 EMA. If we can hold all of that, I legitimately think we have a fighting chance to recover in October and in November. However, if we start to take out the recent low that we just made on Friday, if we start to be testing that 50 EMA, and all of a sudden, if we just see both sides saying, no, you're bluffing, and tensions continue to rise, well, that would be the bear case. Obviously, I know you're watching this and you're thinking, okay, great. How is that useful? Saying, oh, it could go up or it could go down. Well, inherently, remember, as an active trader, that's always what's going on in the market. You have to think of it as an if-then statement. If something happens, then think of B. So if A, then B. On the other side, if C, then D. So of course, what I'm trying to say here is all of a sudden, if tensions calm down, if we get a little bit more of a dovish sounding Fed, if we get some good data drops, if earnings start to come in and they're good numbers, that's all on the bull case. On the bear case, all of a sudden, maybe the Fed sounds a little bit more hawkish than they should. What if tensions start to get worse with China? All of a sudden, what if earnings aren't good? That would all be in the bear case. Those are the things you want to pay attention to. And obviously, I'm giving you the extremes. And in reality, we'll probably have some sort of messy combination of it all. But pay attention to it. Don't try to predict. Just react to the things that are incoming. So of course, you could always go up or down, but it's the things you want to be paying attention to and react to the developments within the market rather than just predicting things such as when will global politics finally break our way. In reality, this is just a brutal reminder of the wild times we currently live in. The market lost over $2 trillion from a single update from President Trump, and now it's just being called a giant misunderstanding. Regardless of what happens, this will go down as a pretty incredible event, and I'm not necessarily saying incredible in a good way, but if we get one of these instantaneous recoveries, this one, if you ask me, is going down in the history books. That's what I have for you today. I appreciate you stopping by. I appreciate all the good vibes. Here's to hoping that you were able to survive Friday and stay fighting in this marathon we call the market this upcoming week. Thank you so much. I'll catch you in the next one. Peace.